Over the last 3 years, Indian IT sector has witnessed a massive slowdown in growth. If you look at large cap IT companies like TCS, Infosys, HCL, their 3-year revenue CAGR is roughly around 10%. But net profit growth has been even weaker, mostly below 10% CAGR. Now if you move to mid and small cap IT companies, situation is same. Mphasis has delivered just about 6% revenue and earning CAGR over the last 3 years. Birlasoft revenue growth is around 9%, profit growth is just 3%. Happiest Mind might look slightly better at top line level, 24% revenue CAGR, but earning growth is barely 1%. So broadly, growth has slowed across the sector. And the most worrying part is growth has further reduced in the last 12 months. So clearly this is a sector-wide slowdown. But interestingly, there are a couple of clear exceptions that are outperforming. The first one is Persistent System. Over the last 3 years, its revenue has compounded at around 28% CAGR and profit at roughly 27% CAGR. That's almost 3 times the sector growth rate. And second is Coforge. Over the same 3-year period, revenue growth is about 23% CAGR. Profit growth does not look as clean due to margin movement, but operationally growth has been strong. What is even more interesting is that even in last 12 months, Persistent revenue is up around 23% and profits are up 36%. Coforge revenue growth is around 39% and profit growth is about 58%. At the same time, many IT companies are down 30, 40 and even 50% from their highs, whereas Persistent has corrected only about 15%. Coforge has corrected more, roughly around 30%, but operationally both companies are still growing much faster than peers. So the big question is, how are Persistent and Coforge growing at such a fast rate when the entire IT sector is slowing down? What exactly are they doing differently compared to large caps and even other mid-cap IT companies? And now that everyone is discussing the impact of AI on the Indian IT sector, the even bigger question is AI a threat or actually an opportunity for companies like Persistent and Coforge? And finally, since both stocks have corrected from the peak, is this an opportunity to accumulate or there could still be more pain ahead? Alright, let's get started. Before we understand why Persistent and Coforge are outperforming, we first need to understand why the rest of the IT sector is slowing down. So first reason is discretionary spending slowdown. For the last 18 to 24 months, global clients have reduced discretionary IT spending. Large digital transformation projects are getting delayed mainly due to AI-related uncertainty. Today, before approving any project deal, many clients are first asking, how will AI change this project? Can automation reduce the number of engineers required? Should we wait for better AI tools before committing large budgets? Then second issue is base size. Today, large IT companies like TCS, Infosys, HCL are operating at massive scale. So when your revenue base is $20-30 billion, even maintaining double-digit growth becomes difficult in a weak demand environment. Although the scale is not a constraint for mid and small cap companies. Then third issue is margins are under pressure. During post-COVID boom, IT companies hired aggressively because demand visibility was very strong. Now growth has slowed, but employee cost does not reduce immediately. So utilization has fallen, that has impacted the operating margins. At the same time, IT companies are investing heavily in AI capabilities and large-scale employee reskilling. These are upfront investments. The revenue payoff will come gradually. So profit growth is weaker than revenue growth across most players. Now here's the interesting part. If the macro environment is same for everyone, if AI uncertainty is impacting the entire sector, if discretionary spending is slowing across the board, then how are Persistent System and Coforge still delivering 20-30% growth? Does that mean their positioning is fundamentally different from other IT companies? So let's now understand what exactly they are doing differently. So the biggest difference lies in the type of work these companies are doing. Large players like TCS, Infosys, HCL still derive a meaningful portion of revenue from traditional services. Be it your application maintenance, infrastructure maintenance, then ERP support and large system integration. These businesses are first to see budget cuts when clients become cautious. Now compare that with Persistent System and Coforge. Persistent is far more engineering-led. It is strong in product engineering, cloud-native development and data and platform modernization. Coforge has deep vertical positioning in areas like insurance and travel platform, where domain expertise matters a lot. Also, nearly half of Coforge revenue comes from engineering vertical, which typically include building new digital platform, modernizing core system, cloud-native application development, automation framework, and product engineering for clients. Basically, Persistent and Coforge are more focused towards new-age digital technology that require higher skill. So when clients rethink about technology because of AI and cloud shift, Work moves towards companies that can build new capabilities, not just maintain the old system. That shift in business mix is a reason why Persistent and Coforge have managed to grow at much faster rate than other IT companies. Then second reason is market share gain. For example, if you look at Persistent system, its top 10 clients contribution has increased in overall revenue. That shows a deepening relationship. Also, its $5 million deals have increased significantly. Coforge has also delivered high growth in their $5 to $10 million deals. So basically, even if the entire IT industry growth is around, let's say 5 to 8%, but if a company gains market share from competitors, it can still grow at 20%. Persistent and Coforge are still in a phase where wallet share expansion within select accounts can materially move the needle. Then third reason is AI. Today, most discussion around AI in Indian IT are extremely binary. Either people say AI will destroy the traditional IT model, or they will say AI will create a massive growth opportunity. The reality is more subtle. AI is disruptive, but disruption does not affect everyone equally. For large traditional IT companies like TCS, Infosys, HCL, a meaningful portion of revenue is still effort-based. Application maintenance, testing, infra support. If AI improves productivity by 20-30%, client will naturally question billing structures. If earlier a project required 100 engineers and now if it, let's say, requires 70, revenue potential reduces unless pricing model changes. So in the short term, AI is creating pricing pressure and renegotiation risk in traditional services. Now if you compare that with Persistent system, it has strong roots in product engineering, then cloud native development and data platforms. When AI adoption increases, companies would actually need platform modernization, data architecture restructuring, AI model integration, application re-engineering, and so on. Here, AI does not reduce this demand. In fact, it increases it. If you really want to deep dive into how exactly Persistent and Coforge are riding this wave, I would strongly recommend reading their presentation and con calls. For instance, Persistent has built AI platforms like Sasva, iAura, Gen AI Hub that are helping them deliver better productivity and help them win more and more deals. There are multiple use cases that management has discussed in both presentation and con call. Similarly, Coforge with its deep domain focus in insurance and travel platform benefits when core systems are upgraded to embed automation and AI-driven analytics. Also recently, Coforge has done a massive acquisition of Encora for $2.35 billion. Encora is essentially a US-based digital engineering company. It works more on cloud native development, data engineering, AI integration, product modernization, and DevOps. Encora brought broader engineering depth, stronger cloud and AI capability, and deeper access to US client. So strategically, the acquisition aligns with Coforge's positioning as an engineering-led, AI-ready company. In the latest con call, management said that the acquisition of Encora is a defining moment for our organization. It establishes a scaled AI-led engineering, data, and cloud service-based capability mode for the firm. But since this deal is very large as compared to Coforge base, I would like to keep a close eye on Encora integration within Coforge and execution going forward. Overall, the difference is for traditional effort-heavy services, AI is a productivity disruptor. For engineering-heavy platform-led services, AI is a demand accelerator. That's why AI is not uniformly positive or negative for IT sector. It is redistributing revenue pools. Friends, I have recently done a detailed video on AI impact on IT sector. In this video, I quoted Dr. Vishal Sikka who said, India has thrived through disruption like Y2K, mobile and cloud. The current goal is to adapt to this and make AI a tailwind faster than it destroys the prior generation of work. So on one side, while AI is killing the legacy work, on another side, it is creating massive opportunities. It's all about how quickly you adapt to this transition phase. Here, companies that are positioned closer to product engineering and digital core transformation are likely to capture incremental spend, while companies heavily dependent on legacy maintenance may see slower growth. And that is another reason why Persistent and Coforge are not just surviving the AI wave, they're actually riding it. Now, if you look at the share price, Persistent has been consolidating in last 1 year and Coforge has witnessed 30% correction. So considering the high earning growth, is it an opportunity to add these mid-tier IT companies? Let's have a look. See, there's no doubt that both Persistent and Coforge have outperformed the peers in terms of growth. However, even after 12 months of consolidation, Persistent is trading at a PE of 50. Coforge has a PE of around 37-38. So clearly the valuations are not cheap in both the cases. By the way, I'll always pay a higher premium to Persistent for better capabilities versus Coforge. Now, as far as future growth is concerned, Persistent management is targeting $2 billion revenue by FY27. Currently, they are clocking around $1.6 billion. So that translates to around 20-25% revenue growth expectation for FY27. In fact, management is even aspiring to reach $5 billion revenue by FY31. So that translates to a long-term 25% kind of revenue compounding. Considering the past earning growth and future guidance, Persistent will certainly command a premium valuation. The only point is, current valuations are already factoring 20-25% CAGR growth. So there is no scope for error, or in other words, there is no margin of safety. Otherwise, Persistent is certainly looking one of the most promising IT company. This can be a SIP grade company to buy systematically. Now, as far as Coforge is concerned, its management is very bullish on latest acquisition of Encora. Management said that Coforge acquisition of Encora will create an approximately $2.5 billion tech service powerhouse with both the scale and capability across AI-led engineering, cloud and data services to drive enterprise-grade AI solutions. AI-led engineering plus data plus cloud service alone are likely to deliver $2 billion revenue in FY27. But as I said before, while such big acquisitions certainly create opportunity, it also comes with the risk of integration challenges. So I would like to watch the development closely for Coforge. If integration proceeds well and growth remains above sector average, the risk reward looks compelling. So if we step back and look at the bigger picture, Indian IT sector is clearly going through a massive transition phase led by AI. At the moment, many IT companies are witnessing slowdown in decision making, and hence growth has moderated, margins are under pressure, and AI is beginning to disrupt the traditional effort-based billing model. But what this phase is also doing is separating the generic players from the differentiated ones. Persistent system has clearly emerged as big beneficiary with quick AI adoption with platforms like Sasva, iAura and GenAI accelerators, and has been strong in engineering-led work, AI-integrated solution and digital core transformation rather than legacy maintenance. Coforge on the other side is very excited with its latest acquisition of Encora, which is a digital engineering company with deep expertise in cloud, data, AI and product engineering. Now from valuation standpoint, Persistent at a 50 times P multiple is clearly not cheap. Market is already pricing in 20-25% sustained growth over the next few years. That means execution has to remain near perfect. There is a very little room for disappointment. So Persistent is not a margin of safety stock. It is a conviction compounder. If you believe in the long-term engineering-led thesis, it can be accumulated systematically. But expecting quick re-rating gains from these levels may not be realistic. Coforge, after a 30% correction, has a decent valuation at a P of 37-38. However, the story now hinges on the successful integration of Encora and the translation of AI-led engineering capability into sustained organic growth. If integration goes well and growth remains meaningfully above sector average, the upside can be meaningful. But if growth becomes acquisition dependent or margin get pressured, volatility will remain with Coforge. So the takeaway is AI is not uniformly negative or positive for the IT sector. It is redistributing revenue pools. Companies that adapt faster and position themselves closer to engineering, platform and AI native transformations are likely to capture disproportionate value. The key question for investor is not whether AI will disrupt IT. That is already happening. The real question is which company will convert that disruption into durable growth. Right now, Persistent and Coforge are trying to do exactly that. So that's it from my side. Now I would love to know your viewpoint. Do you think Persistent and Coforge are leading the AI race in Indian IT sector? And given an option, which one would you prefer? So if you find this video useful, do share it within your circle. I'll see you next video. Till then, take care.